Good morning, ladies and gentlemen. So today we're discussing a very critical topic that's been over the news globally. I think Ravi and the team at JBB has given me a tough task to discuss the evolving trends in Saudi mega projects in less than 10 minutes. So I'm going to try to go as fast as possible, but please feel free to discuss more of these topics offline after the session. Okay, so what's going on in Saudi today? We hear mixed messages. Some of the international media agencies say projects are being slashed. Others say that they're being extended. Some regional media says we're spending even more. I've picked three press clippings that summarizes the situation. Saudi Arabia's PIF is recalibrating spending. Saudi Arabia reveals 33.8 annual boost in spending, and Saudi banks step up to fill the gap. In reality, they're all right. Okay, what I'm aiming to do today is to connect the dots and tell you what's the real story behind what's going on in the mega projects today. So the first topic is it a recalibration or a cost cutting? Let's start by having our compass right. When Vision 2030 was first launched, the total cost of projects that was announced is in the range of $2 trillion. Now, I'll tell you what I was thinking personally when I first saw that figure. If you look at the macroeconomics in Saudi, and if you do a simple math, there's no way that the Saudi government is going to fund all these projects from its own public finances. It's definitely a room for collaboration with the private sector. As at June 2025, today, around 300 billion has been committed. Okay, so that's around 15%, which is a very reasonable rate. Now, most of this is public spending. Where do we go from here? In the next slides, we're going to discuss what are the avenues to bridge the gap from 300 billion to $2 trillion. So the answer is no, it's not cost cutting, it's recalibration. By recalibration, and this is the IMF term that was used for these recent shifts in strategies in some of the projects, it's looking at critical mass of projects, what is needed to meet the promises that were made for projects by 2030, and doubling down on these to create the ripple effect for FDIs and for local investments to expand and generate this money supply in the economy. So, yes, we have a spending cut by PIF of around 20%. That's talking about 2025 figures. Some of the projects are facing reductions of up to 60%, and here everyone knows we're referring to projects like NEOM, but other projects are seeing acceleration in the budgets as well. So in any plan, after 2-3 years of testing, you look at your priorities and you revisit the priorities. This is exactly what's happening in the Saudi mega projects today. It's good to understand the macroeconomic trends to be able to analyze the situation. The riskiest part is debt. And sovereign debt tells us the ability of a nation to tap into funding going forward. If we do a simple comparison between Saudi and developed economies, you see that Saudi is barely touching 30% debt to GDP. USA is north of 120. The euro area is approaching 100%, and China is in the range of 90% as well. So there's a big room for Saudi to tap into funding solutions going forward. I think this is the first and foremost sign of trust and credibility in Saudi projects. Now, anyone with basic notion of economics would ask, at what rate is this debt growing? If it's doubling every year, then in 3 years we're going to be at the same level. Thankfully, the deficit in the Saudi budget is between 2 and 3%. So it's a very healthy budget. And this is the flip of the coin of the recalibration that we just spoke about. So when you stretch out some of the projects to meet the demand projections and be demand-driven and market-driven in the launch of projects, this is what we've been calling for years. Because as local developers, at one point, seeing so many announcements, we were fearing a bubble. So this is a very early stage recalibration to avoid turmoil in the next 3 or 4 years based on what you announce today. And another important indicator is the non-oil GDP. So today in Saudi, the non-oil GDP is leading the growth. 2025 was not the best year in oil prices. So that gap was filled by the growth in the non-oil GDP, which is another healthy criteria. Okay, now, what to expect until 2030? I have selected 8 trends that should be very useful in picking your next move in the Saudi market. First one, rest assured, no projects will be cancelled. Okay? It's a stretching of timelines to be demand-driven, as we said. The second, pick those projects that are being fast-tracked to meet certain deadlines that are approaching. Of course, the usual suspects for these are Expo and the World Cup. The PIF and other entities are prioritizing projects with clear ROIs. Take, for example, King Salman Park. As we speak, there are 2 bids for the private sectors to participate. The growth in the assets and the anchor projects that are self-developed by King Salman Park are above 90% completion, and the park is around 50% complete as we speak. So there are projects that are achieving critical mass ahead of schedule. These are definitely primary targets, whether you're on the investor side, developer, or supplier. Expect more PPPs on infra and utilities, but with less guaranteed offtake. So what we saw earlier in the PPP sphere was projects that have guaranteed offtake. Going forward, investors need to know where they are heading and focus on projects where the market risk is balanced. Migration from national economics to city economics. It's not a secret that Riyadh is leading the growth, but there are other smaller cities that have very interesting stories, specifically in hospitality as well. Again, search for projects that have achieved the critical mass. There will be layoffs in the mega projects, and we've seen many. But that means that these entities will be searching for outsourcing opportunities as well. So it's always good to look at the brighter side. And higher reliance on debt in sources of funding. So, and I know JBB is preparing an event for next year in that field. So FDIs is a key theme in the coming few years. Lastly, I believe if you are sitting in this room, you are part of these 5 functions, either a consultant, contractor, developer, supplier, or investor. So for each of these, we have picked the low-hanging fruit, the opportunities for in the next 18 months. If you're a consultant, please adopt a solution provider approach. If you're a contractor, try to do early engagement mechanisms where there's more loyalty and there's more input early on in the project. If you're a developer, build alliance with international parties. As a developer, we've done 4 JVs with international parties, and they've come very successful. Suppliers, I mentioned this in my session last year, and I cannot stress enough on it. I know the vast majority are suppliers. Doing JVs with local partners and localizing your supply chain is the way forward. And we've seen lots of successful examples. It's all around you in the market. This will give you lower barriers to entry, lower overheads, higher penetration, and access to local subsidies and local funding. Last but not least, if you are an investor, search for the dislocations, whether it's on the credit side, on the equity side, and try to participate in consortiums with winning developers in mega projects. Ali mentioned beautiful projects under USUS. We have similar projects under Rafal, and I think the top 10 developer in Saudi, if you partner with any of them, you can't go wrong. There are very interesting projects coming up. Thank you for listening, and enjoy the rest of the show.